Good day, ladies and gentlemen. In this video I'm going to be teaching you one of the best ways you can actually trade gold. Okay, as you can see, um actually on a gold interface. Okay, XAU USD up here. All right, as you already know, one thing about gold is gold has a particular advantage, and that advantage is that it has a very tight spread. Okay, so once you enter your trade, if you get the direction right, you're going to be moved into profits very fast. All right, so that's one advantage. But one disadvantage, okay, one major disadvantage of gold is that it is very volatile. Okay, very volatile, which is supposed to be a plus, but the volatility is such that, if you're not careful, it can actually, wreck your account. That's if you're not using a very good strategy. And for the fact that it is very volatile, sometimes, it disrespects conventional technical analysis methodologies. Okay, so those using support and resistance, I know many of them have stopped trading gold because gold has this very volatile way of moving, to the point that even if it wants to move in your direction, sometimes if you're not using a good system to trade it, it can take you out. When I say take you out, I mean it can hit your stop loss, then move in your direction. Okay, you can see how wavy it can be sometimes. You see all of this, so the volatility is actually crazy. But there is one particular system that I have noticed that gold respects a lot. Okay, but this system, it's gonna be this system is gonna be disrespected if you're trading it on a very low time frame. Why? Because of the volatility. So if you want to use this particular system that I'm going to be teaching you, let your smallest time frame be 15 minutes. As you can see right now, I'm on the 15-minute time frame. So let your smallest time frame be 15 minutes. Don't trade this system on 5 minutes or 1 minute or anything like that. Okay, your smallest time frame should be 15 minutes. Then you can go higher if you want. You can use the 1 hour time frame, you can use the 4H time frame. It all depends. Okay, but don't go lower than 15 minutes. That's the point I'm trying to make. And what system are you going to be using? So the system I want to teach you, that I have noticed that gold respects a lot, is supply and demand. Okay, and there are 4 types which you need to pay attention to. Okay, there are 4 types that I would um, enjoin you to actually pay attention to. The first type is rally. You see a little base and a rally. So this area where you have this base is where you should be waiting for gold. That's where you set your trap and wait for gold. Gold is going to play around, come into that zone, and then give you an opportunity to buy. Okay, so that's the first type of setup that you should be looking out for. The second type of setup is drop, base, drop. So gold is going to drop, give you a small base which is going to look like a consolidation. You just have to draw out that base, then wait for gold to play around and come back to that level and give you a sell trade. That's the second setup. Now the third setup is going to be drop, rally. It gives you a small base and then it drops. All right, so you draw out that base and wait for gold to play around to that level and then give you an opportunity to sell. And then the last one is going to be drop. You have a little base and then it rallies. Okay, so you draw out that base and wait for gold to play around to that level and then give you an opportunity to buy. So this type of setups is what gold respects most of the time. Okay, so I'm gonna give you some examples which I've already marked out on gold, even up to the recent data. So not as if I'm going 3 months or 4 months back to give you an example. I'll give you an example up to the point of recent data. Okay, so what do you see happening here? Let me zoom in. What do you see happening here? Look at this. This is a rally phase. Price pushed in the opposite direction, gave us a base as though it was consolidating in a tight range. Okay, consolidating a tight range, then pushed out of the range aggressively. Okay, so I'll simply get 2 horizontal lines, which are these lines that I've gotten, this and this. So I place 2 horizontal lines there. Then I'll simply wait for price to do what? To play back into that zone. Then you see what is going to happen. So let's see. price is still playing around. Then at this level, price did what? Tapped into our point of interest, and as you can see, definitely your stop loss is going to be below this. If you want to be conservative with this entry, you can probably scale down to a lower time frame like 5 minutes, and then wait for a change of character. Then you enter on an order block that is formed or a fair value gap. Okay, that's if you want to be very conservative. If you want to go aggressive, you can just place your entry at the top of this demand zone. Place your entry here, then your stop loss goes a few pips below the level. All right, so even though price played into a little bit deeper into our zone, it's not going to take you out. Then it pushes in the upward direction. Okay, so you can see the way price pushed out of that zone and put us in profit. Okay, so it's gonna keep pushing, see all the buy trade that you would have caught, in the upwards direction. Okay, so that's the first one. This is the second example. Okay, so while it was tapping into the zone and giving us our trade, it also formed another setup for us. It all depends on how sharp you are and how much you understand the system for you to be able to decode that, okay, this setup is forming again. Okay, it's just that I have experience with this thing, so I can look at it and say, okay, this is another setup forming right here. So look at this is like a rally zone. Price entered a period of tight range. The reason for this tight range is smart money, big institutions are actually accumulating their position right there. Okay, so you have price entering a tight range like this, and then all of a sudden it's pushed out of that tight range. Okay, so this qualifies as a what? It qualifies as a rally base rally. So you simply wait for price to come back to that zone. You can see I've placed two horizontal lines, marking out that particular zone this way. Okay, so we wait for price to come back there, and you can see what happened. Price tapped into the zone right here. We can place our take profits at this level. Okay, place our SL a few pips below that level and see what happened. Price moved to our take profits swiftly. Okay, so I told you I was going to give you data up to recent price action. So look at this. What does this look like based on what I've explained? What does this look like? This looks like a rally phase. This is looking like a base and a continuation upwards. So if we mark this region out like this, okay, and you can see what's going on here. I can refine my region to be from here to here. So you can see price is currently playing around and trying to come back to that region. So you can just wait and see what's going to happen. It can decide to push up depending on how strong the trend is. If the upward trend is still very strong, it might not get here. It might just push up from here and continue. But if it retraces to this point, definitely it will give you a reaction around this region. It will give you a reaction around this consolidation region based on what I have explained. Okay, so basically that's just one of the very nice ways to trade gold. If you got any value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.